for last year's actual grossed up operating expenses. And we do have 3 topics today. Larry, I'm sure you're going to show those in a minute, but we do have some enhancements to AOE that we want to talk with you about. We have 4 items under that category. Larry's going to talk about the first 3, and I'll talk about the 4th. The second main category of topics, we're going to go through the 10 steps that you need to follow to do perfect reconciliation invoices. And then the third is what we always have, a Q&A at the end, so you can share any questions that you have, and we can get you answers to those. And so Larry will start by talking through some of the enhancements, and I'll talk about the leakage report after he gets through the first 3 topics, and then we'll get into the reconciliation steps. So Larry, if you want to take over.
All right, thank you, Bill. Let me go into the program here. I got AOE here, loaded up. Go to my home. All right, we got a couple new things this year.
Are you going to share about it? Yours? And Larry, are you going to share? And should people click on anything in order to see what you're sharing?
Can you see my screen or not? Yes or no? Can you see AOE?
I can see it.
Okay, they're good. All right. Anyway, so this is our
in order to find it, though, Larry, for those of us, including myself, who can't see it.
Can't see it?
What should we be clicking on?
You just called in, Bill. You didn't log into the meeting. You called in, but you have to log into the meeting yourself.
Oh, okay. I'll do that. Thanks.
I see your phone number, but I don't see
I see it. Yeah, I got it. It was down below. Thank you. Somebody needs to mute their phone, please. There's a lot of background noise, if you don't mind.
That's true. All right. So hopefully everybody can see my screen. So the first thing is on the let me print a report here, our reconciliation or billing summary, and let's see. I think this has it. We have this min-max applied thing. What we did is we had a couple people using this min-max field, and what it is it's not a cap by itself. It's really just the maximum amount they can pay. And normally we say the maximum amount could be unlimited, so that's why you put the 7 nines in there. 9,999,999 is basically unlimited. And we also have a minimum. Mostly it's minimum 0, so we can't go negative. I have seen leases in the past. We had a couple IBM leases and some GSA leases where they had base years, but when our expenses went below the base amount, they actually got credit back, so they paid really negative escalations. That's why we put 0 in there. But again, these can be adjusted, and we had some clients using this field, and we realized we only had one number for both, for tax and operating, and we need it separate because tax could go up and operating could go down, which it happens frequently. So we split out the minimum and maximum fields in the profile. You'll see now there's an extra couple min-max fields on the bottom right of the profile. We also on here we showed before we used to show the min was 0. We showed minimum amount 0 here, not negative 48,000. And here's the minimum here. So we're saying, okay, if they did. This is because I have my 9,999 for 19 as a base year. I don't know what this is yet, so that's my placeholder. And when I load this up, it would go to 0. But right now it shows a big negative $96 per square foot as a overbuild. And down here, it would be $48,000 based on their square footage. But we show up here, this is what they're really being billed on 0. So you'll see the 0 here. There may be no prepayments, they owe nothing. So let's find another one here if there's any more. So if you see the number up here as a negative, it gets adjusted here in the min-max applied column, whether it's, sometimes this one goes up, one goes down. So if one goes down below 0, we only take the positive one down below. So if this is negative 11,000 here, you'd see 36,000 over here, not the 48,000 or 47 something change. So that's how that applies. In fact, I'll go back and show you in the, let me show you in the profile screen real quick. All right. So down here, you'll see we got more min-max. We used to have just one of each. Now we got one for tax, one for operating. If you got separate, let's make this a separate, and you can see it. So now I got a bunch of fields down here, pretty much the same. And we just copied what was in there before. So we had 999s in the one field. We copied down to the tax field too. So we took care of that for you. There's no adjustment needed. That's what those are for. So you see it looks a little more complex. There really is nothing to it. Just leave it like this unless you have a crazy lease that lets people go below 0 in a in their escalations, or they have some kind of different minimum, maximum. I also tell people you want to make a bill for $10,000, you put $10,000 the minimum, $10,000 the maximum, and that's all they're going to get billed no matter what they calculate. So that's a way to override the amount of calculation.
Like a GSA lease or something.
Yeah, but you can override it. And give people, you want to give them an invoice for $10,000, you can do it just by doing that. So that would override the amount.
Larry, what prompted this change? Was it a client?
Yeah, we had a client that used the minimum. They were using the minimum for several tenants and the maximum, and we only had, they had separate tax and operating. We realized with only one number here, we couldn't apply it to both, because if one goes up and one goes down, you don't get the offset between the two. It's not the combination of the two. They're all separate calculations, so nothing on tax and something on operating. So we had to make an extra field to handle this thing. It was a lot of programming time involved in testing, but now it's pretty much done and it works. So
for the purposes of education, especially for people in the Midwest, in the Midwest, excluding Chicago, the majority of base years, if a base year is used, it's one number that combines operating expenses and property taxes. But if you get into the larger and older cities like New York and Chicago and I suppose some parts of California as well, their leases have morphed into really two different base years, one for operating expenses and one for property taxes. And so that's why you see this being a little bit
that's actually advantageous to the landlord, because if one goes up and one goes down, they don't get the net of the two. They get one bill for tax, one bill for operating, and if one's negative, they get zero. So it's actually better for the landlord if you do that. But it's market driven typically. Like Bill says, it depends on where you're at. All right, my next one would actually be some filters. There's some really nice filters. Go to expenses. This is a good one. And up on top, we have more drop-down buttons and a box in here. I can drop this down. And I can just pick blanks, non-blanks, just administrative or clean. I'm looking for cleaning accounts. I can click on cleaning, and it filters for that. I could also do it in here. Oops, come back.
Larry, would you go back and show where the filter pops up again, and then explain why someone would want to use a filter?
Well, I mean, we have a very small chart. This is my my sample test building. We have people with 200 accounts in a chart, and you're trying to find certain accounts. So you look by account group if you want to. So just filter out. You drop down this arrow. All right. There's different options. Here's every available value in that field, or not blanks or non-blanks. Or if you wanted, you can filter on here. Whoops. This little filter button here, and you can do by begins with, contains, doesn't contain. So I want to see everything that contains contract. All right. So I type in contract. If I can type right. Wait a second. So I'd have none. I don't have any in there. So like cleaning contract, janitorial. I'll take it off. So basically it's a way to filter things and find things easier. Because again, this is a small chart. Most people have more than this. They have 100 or so accounts, sometimes 200. We've even seen 250. So it's a way to filter things and find things easier. It works on any column. Anytime you got these headers up here like this. Again, you can also just click on this. You can sort. Click on it, sorts up to down. See high to low or low to high. You can filter on find anything in here. So you want to pick all the cleaning. This is account description. Let's go back over here. So I want to find all of my utility accounts. Oops. I drop this down. Find utilities. That's all I see. That's all I see displayed. It also gives me a total down here for just that what's visible. So here's my total utilities right here. So it's a pretty nice feature. It actually makes it a lot more usable, a little more flexible trying to find things, especially with a large building. And then our last thing is this leakage report. I'm going to let Bill talk about this one. And this is under our AOE reports. On the first tab under current year recs. I think we have one for budget too. We have budget leakage and a current year leakage. I'm going to pick for everything. I got all my tenants here. I picked all my.
Just pick 100% gross up if you don't mind. And,
okay, so let's go to the
there you go.
Expense pool, 100% gross up.
Yeah.
I'll take 2 or 2. And then I go down here and pick my actual tenant leakage. All right, Bill, let it rip.
So, yeah. So we want to give credit to one of our Houston clients for this. some of the way we understand some of their ownership and management folks were intrigued by the leakage percentage that shows up on our dashboard. I'm sure many of you are familiar with the two dashboards that we have. And what leakage represents is the landlord subsidy. It means it's operating expenses that the landlord is paying for because they're not reimbursed due to the structure of the lease types or due to vacancy in the building. And in this particular test building that we're looking at right now, we have a total, look over in the far right-hand side, we have a total of almost $370,000 of expenses out of the $1,573,000, a little bit to the left. Yeah, there you go, Larry. Thank you. So out of the $1,500,000, we have $370,000 that the landlord is subsidizing, and that represents roughly 26% of the total operating expenses. Even though the property is, in this case, I think it's 90%. Larry, you might go back to the dashboard so we can see how that ties through. But you can this leakage report. It shows, tenant by tenant. That's the one thing I didn't point out on the report that Larry just had open, is that you can see what each individual tenant's leakage is. When you're in the dashboard, where Larry is now, you see the leakage is. No, this is different. We have
leakage. Well, this is everybody. You showed just 100% tenants.
Oh, you're right. That was just the expense pool number 2, right?
Yeah.
100% gross ups. And so the total leakage for the whole building amounts to roughly 83%. And again, it's because of the lease types. If you look up at the top right-hand box called Calc Lease Types, you'll see that explains why there's such a huge percentage of leakage. With a base year, as everybody knows, the landlord subsidizes 100% of the operating expenses for all of those 7 tenants. They make up half of the building at 49,000 square feet. They pick up another 2 buildings that have expense stop type leases. Those are very similar to base years. So you've got the 49,000 plus the 19,000. So roughly 58,000 square feet of the building is a base year type. Are where the tenant pays 100% of the operating expenses that are allocable to their occupied square footage or leased square footage. And so in this case, it's a 100,000 square foot building. Net leases account for 30,000 or 30% of the building, and the leakage amounts to 87%, if I remember, 83%, sorry, 82.7%. So there's a rough correlation between that percentage and the square footage of the base year and expense stop leases. But what it also takes into account, the leakage takes into account, is the 10% square footage of vacancy. So it's a really useful report. The leakage report is, and so is this section of the dashboard. It's useful because leasing folks who handle your leasing, they need to know what the side effect is of whatever type of lease they're negotiating in the marketplace with various tenants. The majority of the larger cities in the U.S. over the last 10 years, 15 years, they have migrated to triple net leases, especially in those markets where landlords have controlled the conversation. In smaller markets, base years tend to be more prevalent. I've mentioned this before. Larry and I did a study in the year 2000, and 85% of the leases in major cities that we were involved in at the time, and this was 14,000 leases, 85% of those leases were base years and only 15% were triple net. And today, it's closer to 50-50, where 50% are triple net. And another big driver of that change is that there are a lot more institutional investors who own, the best Class A and Class B office buildings in many of those major markets, and so they tend to have the ability to hold out for what they want better than, say, a single landlord might. And so I think the trend will continue. You'll see that triple nets will move more and more. And we want to encourage you to print out the leakage report and some of the other reports that are very useful by the folks on your management team or leasing team or with ownership. And that what's occurred to Larry and I is that AOE has all of these great reports in it, but typically only the accountants and sometimes property managers use AOE. So these reports, sit inside of AOE and don't generally get used unless the accounting department or property managers, and in some cases the administrative assistants, print these reports out and freely share them with other team members so that they can see what's going on. Larry and I come at this from two different backgrounds. As you all know, Larry's a CPA, and he's been handling property accounting for many decades. My background is property management, and so we look to AOE to generate different things for us because of our different skill sets. Larry wants, all of these numbers to tie to the penny so that all of the invoices are done accurately. I want that as well, but what I also want AOE to do is to provide, is to be utilized as an information system so that ownership and management can maximize rents, which in turn maximizes net operating income, which in turn maximizes the value of each property that uses it. So we really want to encourage everybody that's listening to print out a number of these reports, find out which ones your team members really like, and just plan on giving it to them once a month or once a quarter or once a year. That's it, Larry, on the leakage report. Thank you.
Okay.
And I know you want to jump into the reconciliation steps now.
Yeah, it's going to take us a little bit of time here. I got 3 pages of notes here. So first of all, let's start at the home page. The biggest thing is you got to be in 2019 when you start, and you have to have closed 2018, because what that does, that generates all the 19 profiles that you need to settle up for 19. So look on the
Larry,
main home
is it possible to open the PDF while you're going through these?
No.
And I know we can share the PDF with everybody.
I will actually. Anybody who sent me an email, you send me an email that you reply to want to be in the webinar, I'll send one to you automatically. We'll put it out here on the download suggestions. We'll put it over the weekend. I can stick it out over here in our webinars.
There are a lot of
recording
steps
this
here,
too.
so we know. Everybody knows that there are a lot of steps, and so this document will be very, very helpful to you, and we want you to have it.
It'll be right out here in the help instructions. But also, we're recording this too. This is the one we did last fall. We'll put out this one here over the weekend too, hopefully.
And that recording in the fall was for pre-bills, and so you're welcome to listen to that. It's linked to a YouTube audio, and so it'll walk you through the fall session as well, and then we'll have this one for the spring posted also. I'm sorry, Larry, go ahead.
Okay, that's fine. All right, so first of all, you got to be in 19. You look up here, system settings. My current year is 19. That's good. This working year, like I can go back in time. That's the nice thing about AOE. I can go all the way back to 1997, 98 here, but I'm working in 19. I want to make sure my current year set is 19. Now, if it's not, we have to check what year you're in. Go to your rent roll, go to your profiles, and verify that you have 19 profiles. If you went up here and they were missing, I got nothing for 20, means I haven't closed 19, because once I close 19, it creates the 20 profiles. So go into rent roll, go to profiles, click on 19 and make sure you got the profiles out here. Then you're good to go. That's actually your starting point. These are the ones from last year, or anything you added during the year. If you keep up AOE as you go, as you do new leasing, you can keep this maintained all year long. Every month or two, go add the new leases, add renewals, any changes, then you're all set to go by year end. So he's mentioned that one of our old users, Karen McCampbell from Transwestern, used to bill her stuff in February 1st because she kept it updated all year. She had all her stuff ready to go. She added a few expenses, a few adjustments, and she readily billed people in February, which is unheard of in the industry. Usually people are just starting now, not ended already. So make sure you got 2019 as your year. Now, if you don't, if you haven't closed out yet, go back to system settings, there's a year in close here. But you got to make sure first you're in 18. So go back into system settings, because you can move the year up without having the year closed. So here's my TV webinar building. I'm in 19. So say I want to close 18. I go back here, update it. Now I go to my system settings, year and close. Here's 18, hit close year. That'll create another set of profiles for 19. But don't do it again. It's better just doing it once, because we actually not supposed to make another set of profiles. But I sometimes wonder if it's going to screw up something in the process. So basically, don't only do that once. If you have 19 profiles, you're good to go. So let me set this back to 19 again. Oops. All right, now I got 19 again. That's my first step. Okay. Then I also recommend from the home, you're going to start changing things. What we have is 19. We have 19 expenses, and these are probably, or should be, your 19 budget. Go back into here. We're going to overwrite these things, the current year 19 with, this is budget information from 19 with actuals. So I highly recommend making a copy. You go into copy import, go to copy data, and I'm going to copy from my TV webinar. If I had here's a stats and a stats backup. I would actually have a backup building for each one of these normally. These are just our test data, so we don't really worry about it. So I would copy. I could make a new one. If you don't have one already, you can make up to 3 extra copies yourself in the change the billing ID or make a backup copy. I'm not going to do it here, but if you need help, just give me a call and I'll walk you through it. But I would copy TV webinar. Say I copy to my TV backup over here. All you do is click the file here. You drag it over until you get to the one you want. See the yellow arrow? I light up. Now it says I'm going to copy my TV webinar to my TV backup. Everything. It copies, make an exact duplicate. See my copy data? Now I can always go back in time. I can always go back into my TV backup and see exactly what I had before all my changes were made. So I highly recommend doing this at least once in a while, and at least after you do your final billings, because it's nice having what you did bill before, because sometimes people go back and make changes to prior years. Then they run reports because somebody wants to see something from the prior year, say a tenant audit, or maybe one of your managers wants something, one of the owners. And if things change, there's no going back unless you have a copy someplace, or you have a hard copy to go back to. So I highly recommend making a backup first. And that's my big suggestion. All right, now we start on the year-end close process. So the first thing is you got to update your rent roll. So you guys probably did this when you did the prepayments in the fall, a few months ago. You probably put in at least up to that point, but you might have more changes since then. So go to your rent roll. Go to your tenants first. If you have any new tenants, you have to add them in here first. That's tenant name and address. This is where the invoice will be sent to. If they already exist in the building, there's no reason to make another one. So I wouldn't make a Meadows too, because Meadows renewed. This is just for name and address. If it didn't change, or it changed, you put it in here. It's a different suite number, but you don't want to make a second tenant name if you don't need it. These are covered, any year, and any profile, any lease. So it's sort of generic on the screen. Once you have your tenants all set up, if you need more, add one more. Then you go to your leases. Okay. If somebody adds a new lease, so you pick their tenant, do an add lease right here. All right, I get a new box here. I'll give them a tenant name. I'll call this new 2019. All right, and I got to pick a tenant out of the box. Now these are tenants already been set up again, so it has to be done first. The tenant's got to come first. Let's make this with another brownfield Meyerhofer one. Tab over, do my lease dates. I'll make this 11/01/19. Whoops, did I lose it? 19. And let's say it's a 10/31/29. All right. Save my changes. It saves as you go. All right, now I got my new one down here. There's my new tenant here. Now I can make a profile. But before I make my profile, I got to make sure my profile template is correct. So up in here, because this profile, where's my rent roll? Profile template. So I need a 2019 profile to start do a 2019 new lease. This is fine. This is what it's set up normally. This is okay. It hasn't changed. This is good. We're good because we did this before in the prepayment calculations. Again, it's on the same fields, everything else is the same. This is my starting point. So I'm saying they're all net leases, mostly combined. Most of them use a square foot over the denominator, not a pro rata share. Most of them use expense pool number 2. There's no cap typically. These minimum maximums that's my defaults. 7 nines for maximum, 0 for minimum. And I base my prepayments on budget. So that's okay, I'm good. I can save it if I need to. If I made changes, I have to save it. I didn't have to because I didn't make any changes. I'll go back to my rental.
Larry?
Yeah? Bill?
Could you open up the 10-step PDF and show people where you are?
I can get it right here.
And then you can, yeah, there you go.
So we're updating the rent roll first. That's our first step. Because, again, you have to have all your leases in for the new year. Any changes, any new leasing, any renewals, things like that have to be input first. Again, this is basically your starting point. So first do your profile template, make sure it exists. Because you can't do a 2019 lease without a profile template. And it should be out there, but if it isn't, you got to add one yourself. All right. Now we're going to profiles. Hide this up. Okay. I'm going to go back to rent roll, leases. Where's my new one? Now this button here, you open this up, you'll see what leases I have. There's none here. There are no profiles. I click on this, it brings me to the new profile screen. So it starts with that, here's my basic setup I showed you just from the template. My 999 square feet, my net lease. Now I put the real date in here. So it's 11/1/19 is correct to 12/31. This is for the 19 profile. I have 2 months. If I have free, say I abated 1 month, I can make this 12/1/19 for 1 month of abatement. And we start now on 12/1, not 11/1. My suite number, say it's 125, 135 square footage, 10,000 square feet. Over 100,000 would be 10%. It's combined, that's fine. I can make it a base year if I want to. Now if it's 2019, don't know what 2019 is yet because I'm reconciling 19 right now. So once I'm finalized, I can go back and figure it out. But right now we put in my 7 nines as a placeholder. Expense pool number 2 is fine. That's fine. Are they going to make prepayments or not? And with 19 base year, they wouldn't make any. But if they did, I could put in the prepayments here, what they paid, for this year. These are fine. Do not bill them. I'm going to bill them, so that's good. So I'm all set. Now I just save my changes. So now I got my profile.
Does this take the building to 100% occupancy?
I don't know. This is,
we were
as I keep adding.
We were at 90% before.
I know.
Right.
Yeah, but I keep adding. That's the trouble. I keep adding, test tenants, and it gets bigger.
No, that's
sometimes
fine.
bigger.
No, I'm just curious.
Yeah. Let's go to profiles again. So now I got a profile. This is my. It's always the next number. This is 682. That's the one I just set up. Again, I can sort by name. I can filter by things here. I can filter for certain tenants. I can sort things high to low, low to high. I can just look for things. I want to see all the ones that are my square footage. Here's a small to large, large to small. I can see which ones have base years. Here's base years. I can set up net leases. They're all based on budget. Here's a lump sum one. They don't make prepayments. A couple of them. That's a GSA and a Internal Revenue Service. They just pay in arrears. Here's my base year amounts. Again, here's my 2019. So I know I got to go back and fix this one because that's not settled yet. So again, it's just sort of a nice handy screen. You can click on this thing and sort of see what you want to do. All right. So once I got that set up, I go back and put in all of my rent rolls in. All right. Once we're done with that, we're moving to the next step, which is our chart of accounts. Let's just go back to here. So when we're done with the rent roll, that's all done. Update our chart. Now again, a lot of people, most people keep adding accounts. I've never seen a company, delete them. Usually, unless you do a big IT conversion, but usually they keep adding more and more every year. So it's pretty easy to add an account. We're going to add one new account here to our chart. So let's go back into AOE. I go back to my expenses. So I'm done with my rent roll. Now I'm going to expenses. Chart of accounts. Now I like this is the view that shows it by category. Again, admin, I can sort by this. I can sort by over here. This is how it's going to print on your statements. When you print out your expense full summary, it's admin first, cleaning second. Or I can do it alphabetically. I can open these up and see what's in there. I click on the plus sign. Well, I like it better in this master edit mode. If you're going to do a lot of work, this is all the counts in one big string. Again, you can filter and find things here. I can drop it down and find what if I'm looking for a certain account, I can find it through here. I'm going to add a new one though. So let's go back. Let's try adding a new account. So I go to my new button right here. Give an account number. I'm going to make this 99999. So it goes to the front. The description will be my new test account. I'm going to pick an account group. This is going to be in the admin section. And it's not a real estate tax account, so I leave this unchecked. That's what this is for. It's a checkbox down here for taxes, so it's not. I'm going to save my changes. All right, now it's up here. Now I got to modify it one more time. I got to assign it to different expense pools. So which one of these pools is this in? So again, this is my, say this was an admin account. It would be in here. So it's in the pool here. It'd be in this one. See, net of E, that's electricity. Nope, it's not in that one. And this would be in this one. Now, is it controllable or not controllable? This would be a controllable expense. So I'd click off this, 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 and this. And is it a gross up account? Probably not, but I could gross it up. If it's not one of our 7 total cost gross ups, I can do my percent just method right here. So now for number 1, it would gross up. Again, this is not a gross up pool. That's probably wrong. Let me back it out here. Oops. So down in here, if it's a gross up, I can put it right in here. I would just take the percent adjust method, save my changes. So now if I went into my percent adjust gross ups, you'll see this new account in there. It was number 1. Here it is. So now it's available in here as a gross up account. So that's how easy it is to add an account. But you got to do all that stuff at once. So you assign it to the expense pool, tell it whether it's controllable or not controllable, and assign gross ups if necessary. All right, so that's our next step. Next is clear your budget data and load your top 2019 actuals. And let's go back into here. All right, now we're done with that. Let's go to expenses. Next step in here. All right, so here's my 2019 budget expenses. And unfortunately, I'm in the office right now. I'm not at home. I had these things saved. I'm going to do another export here. Let's export this one. And I think I need just what I need here. That's my amounts. So what I have now is basically an import. I can put it right back in like it came out. Since I don't have a import file set up, I'm going to make one here real quick. So I'm going to show how it works. This is going to be my, let's save it. Go back to AOE. All right, so first I want to wipe out what was here before. This is your budget. That's why I say I want to save a copy and make a backup of this before I wipe it out, because if I wipe this out now, I can never go back and figure out what I did for my budget unless I look back at hard copy. So I'm going to clear it over here in this button, second menu bar, clear all amounts. I click that. It's going to clear the current amount, not the budget amount. Hit OK. So now I got zeros here, and again I got nothing here. All right, now I'm going to go back. I'm going to import my 2019 actuals. In this case, I'm going to put the same numbers back in, but let's go back. Copy import. Import data. All right. Building expenses. It's my webinar building 2019. Select the file. It's the one I just exported. It's going to give me a little preview down here below. Okay. So here's my account. Here's my expenses. Oh, I need to get rid of these periods. I forgot to do that. Let me go back in here first. And I'm going to Nope, I got 3. Sorry about that. 3 zeros and 4. All right, what am I doing wrong here?
Larry, it's comforting to know that you make mistakes too.
Yes, I do. Okay, so I got my accounts. Then I don't want to put the periods in. You know, that inserts it automatically. AOE does that for you. So I don't need this column anymore. Now I'm going to save this again. I'll put my 0 in here first since I had a 0 on that one. Save it. Back to AOE. I got to select my file again because now I changed it. Now it should come in here without the periods. There it is. So it looks good. Now I can load it. Now I'm back where I was before. So basically put this, now I took them out and put them right back in. Because normally it would be different, but in this case it's just for demonstration purposes. So now I got my expenses. Now I can start working in them. I can do my other adjustments. So my next step is
15-minute warning, Larry.
All right. Where, let's see, load our budgets. You got add new expense pools. So maybe add a new expense pool in here if you did. So you got another one that's a 90% gross up. I would do a new pool. We'll call this it's number 6. It's 90% gross up. Over here, 0.9. I would save it. Now I update it. Open it up here. So it's got every account in here. I assume that's okay. So I just leave it as is. I can exclude counts if I need to by taking them out. But that sort of gives you the idea. So that's how easy it is to set up an expense pool.
Larry,
yeah.
Just a question for you. Since we're now at 100% leased on square footage, right? Because you added that additional tenant.
Yep.
That's going to impact gross ups, right? So the 90% gross up you just did, the 95% gross up.
Well, yeah, but this is
those
because
should be roughly disabled.
No.
I'm just making a point. I'm not trying to.
But you don't disable it because what happens if somebody moves out next year? Your big tenant moves out in June. What happens?
I'm not saying that we disable it. I'm saying that the mathematical function essentially gets disabled because the gross ups aren't necessary.
Yeah, it'll calculate nothing, no gross up because you're above 90, you're above 95.
Right.
So it's really a moot point. The 100% gives you some gross up, 90% gives you nothing in this case. So that's expense pools. All right. Next, you're going to go to our upgrade your occupancy numbers and gross up info. Let's go back into the gross up screens. So now I go to the next one down. All right. So I'm at 19 now. 19. This is what my budget was. I can put these numbers in here. Your actual numbers is off your rent roll. So every month, put in how much is you've got leased, and any lease but not occupied. This is used for the management fee gross up. So basically, it's economic versus physical. Utility expenses. Take your electric bills, put in total kilowatt hour usage, total cost off each bill, and it calculates everything for you. Same with gas, with therms and gas cost if you have that. Okay. And then if you have total, that's the total cost gross ups. And then you go back into my total costs. Pick a pool that has a gross up, in this case number 2. I'd have to do all these together at one time. I got to do individually. So this one I'm grossing up cleaning supplies, gross up electricity, elevator, gas, every one of them being grossed up. So I got to fix every one of these things. So management fee, actually nothing probably changed in here. This really just does it all by itself. Just recalculate, see if it shouldn't change actually, because it updates by itself too. Now if this changes, contract, maybe your cleanable square footage changes, maybe your general contract rate changed. So if a new janitorial contract, maybe it goes from 8.75 down to 8 cents a square foot. So you got to fill out these two numbers. Cleaning supplies, this is just automatic, just a recalc. It should be the same number. There it is. Electricity, the big number is this one right here. It's 24.25. Now that should stay constant unless you made some energy saving improvements over the year. So say you put an energy management system or lighting retrofit, this might come down. So if you don't have nothing changed, I would keep this number constant. It makes the gross up more normalized year over year. You don't get big swings up and down. Same with gas, based on therms, but I don't see this very often. We don't really have any gas gross ups. Elevator, this is more of for a really vacant building. Most people don't use this, but if you have a really vacant building, they shut down some elevator banks. You ought to put in the monthly contract and the gross up to the full amount. In this case, $19,200.
Larry?
Yeah.
Just FYI, we're starting to see elevator discounts due to lower occupancy in Houston now. Not everywhere, but we're starting to see it in
that'd be a reason to use it then. Right, you could use this then. Yeah.
Yep.
All right.
Yep.
And taxes, again, taxes are a little bit, odd. Sometimes most people don't do it, but all you need is a letter from your assessor saying if it's a full building, in this case $5.5 million, it would be assessed at. Right now, my tax bill shows, 5.3, so that just does a calculation of what it would be at a full value. But you need some kind of expert advice to get this number. You can't just plug it in, ballpark and do it yourself. You need some kind of backup to support your numbers. And then the next piece was
we don't recommend using the tax gross up except in very unusual market circumstances.
Yeah, or maybe California with Prop 13, you might want to do it there. But then you got to look at your gross ups here. These are the percent of justice, gross ups to any account. Here's a new one I just added. I would open this up. Now I was saying that I have to pick an account that's going to this test account, which I don't really have. There's nothing in there right now, so it's got 0. So say I have to pick this number here. What's my fixed expense at full occupancy? In this case, say it was 50%. So I put in 0.5. That would do the update. And then we recalc it. The trouble is we got no expense. Let me pick another one here. I'll go back and let's do my next gross up. So here's one for trash. Let's say it's 10%, it's 25%. Put in 0.25. So now it's got more fixed. We need less variables, so this should go down. I recalc it. So now 51 becomes 2567. This is very easy and very quick. Not quite as defendable since, how are you going to, who knows what should be 0.1, what should be 0.25. So put it back like it was. So do this for each one of these categories. And if this didn't change, the fixed percent, there's nothing to do because it does automatic. Everything is automatic in here. And then we'll add more accounts. All right, we're getting there. All right, expense pools. We did our gross ups. Next is capital amortizations. So again, if you have any capital amortizations, you want to add them for the new year. So go back next tab, capital amortizations. All right, in here, let's do a new one. So make new job. All right. Insert, where'd I go? Here it is at the bottom, always the bottom one. Let's call this, let's pick an account it's going to go to. So this way, capital amortization. I can pick any account. I can go to R&M. Say I'm doing a HVAC chiller repair. I want to amortize our chiller replacement. Let's put it on in there. Cost $100,000. I can put some interest on top of it. That's $10,000. Okay, let's put 0.05. Get to 19. Do over 3 years. And update. All right, now I'm going to add my expense pools. So here I go in here down bottom. This is important. Which pools are going to get this one? So let's put it on the gross up one. That one. Let's go to janitorial. Yep. I do number 6. And finally, number 1. Save it. So now all 5 of these pools are going to get 35, 96, 51 per year from 19 through 21 automatically. It's all built in. All right. Now that's about it for your setup. Now you're all ready to start printing reports and start doing your checking. So let's go to first I'm going to do error checking. This is important. When you're all set to go, click the error checking, the first one, profile and gross up issues. See something in here in this profiles with errors, this first screen? Let me find one that has problems. Let's go to my, here's an old one. Let's see if there's something in here. Nope, nothing there. TV. There we go. Now these have the problems. Again, these are way back. These are old from the year 2016 and 9. All you just click on the edit button. You can see what's in gray. This is a 17 lease, but it's got, actually this is okay because this is a 17 lease, but it's got, this is our placeholder for next year lease when they set it up. So it's a 16 profile, but it says, okay, it's 12/31/16 to 12/31/16 means it's really for the next year. just so you can do your prepayments. This one actually is okay then. So I can go back. That one's actually all right. Let's look at the other one. And same thing. This is a 2009 lease. I had 2008. This is actually all right. But a lot of times you'll see dates don't make any sense. This might say, 07 in here, 12/31. See, that's wrong. If somehow you saved this thing, got out of here and just saved it, it would actually then pop up next time with these grayed out and say, okay, something's wrong with the dates. You can't put a lease in that starts before escalation starts before the lease start date. So that's what that's telling you. So you got to fix these first. So let's go back into my reports. Let's go back to our.
You want to fix that one?
No,
I won't save it.
Okay, I didn't save it. So the webinar building again. All right, so now we're in our report section. We're down to here, number 7 already. So run your reports. I'd say, first of all, make sure your year is set to 2019, current year. Set your filters first to include all records or refresh report once. And then you print the following reports: the billing summary, the prepayment summary for management, and then a 3-year comparison under expense tabs and 3-year expense pool summary. So let's go ahead and do those. All right, I got 19 is good. 20 is my budget, that's good. I do all filters, make sure I got everything included. These refresh once. And you only refresh once unless you, if you go back and change something somewhere else, you have to refresh when you come back in. Otherwise, you don't need to do it again. But if you change something, say in a rent roll, add a new lease or add a change of profile, you have to update this, refresh again. All right, now I'm going to print out a billing summary. I look at this, I print it out, and I look it over and see, does it make sense? Here's a 19 one, but that's okay because I haven't done 19 yet. Now I actually can come back and I can fix this once the 19 is been reconciled. But right now I don't know yet if this is final until it's been approved. Here's my free payments for the year. They owe $544. They paid $452. They owe us $92,000. I say, okay. Most is because this one. This is a lump sum one. That's a GSA. Another lump sum someplace up here, I think. Where's no internal revenue? They don't pay either. So $5,000 here. So that looks pretty reasonable so far. So I would print this out. I would give it to my managers. Maybe the regional managers have to take a look at it and see if it looks reasonable. Make sure you got all the tenants included. Go through here and make sure you haven't missed anybody. Some new tenant is missing. All right. I do that. I'd also do this summary of prepayment summary. Here's all the prepayments for the year by tenant. Make sure this matches what your GL has and what they really paid. Again, I prefer using this method where you put the full amount in and let it spread it across the year. If you want to do it by month, you can actually put this in by month. Let's say this guy here, he was paying $1,000 for January, February. We bumped it up to $1,250 in March because we were late in getting the estimate done in their prepayments. You'd say it'd be $1,000, $1,000, and then $1,750 here to make up the difference. You could put that in. You could overwrite these numbers, put those in there. But we really care about the total. So if you really want the monthly amounts, you can do that. But I think it's a lot more extra work that I wouldn't really recommend doing. But if you want to do it yourself, knock yourself out. Then back on the expense reports, I print this one first. I like this report a lot. This actually shows you the trends this year, next year, and last year for all the different expense pools. It's just high level, very high level.
Got about 2 minutes.
All right. So again, here's my 100% grossed up. I had a 6.92% in operating, 1.85 in taxes. The taxes are pretty much the same everywhere. So this looks pretty reasonable. This went up a little high here, but I want to investigate why it went up so much. Some of these are a little bit high over 18. So you might want to investigate the bigger ones. And how you do that, you go back and you do the expense pool summary or expense pool detail. Let's do the summary first. So let's narrow in on where the things are changing. I can do it for one pool. I'm doing all 6 right now, but I can do it for one. I just want to look at one of them. Come on. All right, let's look at number 2. Here's my increase. Here's my biggest increase right here. R&M went by $42,000. All right, so I want to look at that. What went up? Admin went up by $18,000. I'd look at that too, and I'd say, okay, why are these going up so much? What caused those? So I can explain it to my manager or my owner and my tenants. So that's what these are for. You can also drill down and print the detail report, which does the same. Let's do number 2. And this one shows the detail. So I'd say, okay, here's my big increase. Management fees went up a lot because the gross up. Well, R&M went up. That's the other one. So
I think it's because of the 10% occupancy increase as well.
No, because it didn't change my table. I didn't adjust my table for the occupancy tables. I didn't touch that. So I didn't change that at all. But anyway, so this is, here's my two accounts that went up: engineering payroll and management fees. So if I can explain that, I'm pretty much good to go.
Back to your 10 steps.
Yep, where are we at now? All right, now that's okay. I got no more adjust. I have to adjust it if I have to. I can go back and make changes. Something looks wrong. I might have missed an accrual, or I might have missed an expense, or maybe I got something that's miscoded. So I fix all that, and I'm ready to create my cover letters and my invoices. So you go back into here, go to my invoice and support tabs. Now, first under reports, I got cover letters. I got two versions. I got one for the prepayments and one for the current year. Now we're doing the current year. So I look in here and I say, okay, let's make up. I want to make a new one up for every pool. Say pool number 2. And I put some text in here. So this is to explain the 2019 PEXIMC area. Okay, I save that.
So what you type in here is the explanation to the tenant.
Right. This is
for expense pool number 2, and where you can choose any increases or changes or unusual items, and you can build that into your narrative.
Right. Sure, it looks like here.
One of the things that, and you can flesh this out with as much or as little information as you want. Larry and I, from a numerical standpoint, we generally just want to show 1 year, not 2 side by side. They can pull out last year's if they want to try and compare it. But if you do it for them, it'll just generate a lot of extra questions.
Right.
It's your choice as well, if you're okay with that.
The invoice, here's our invoice that prints out, by itself. I want to explain what went up, if it went up a lot or not. But it's a way to head off questions. Right. You sort of beat them to the punch. All right, well, you know that taxes went up because we got reassessed. We're trying to telling you trying to appeal it. If you appeal, you give them back their credit. Once it's approved. They also do a tenant expense summary. This is Bill was talking about tenant expense summary, which is a nice report. Just shows high level, basically. Here's your categories, here's your amount, here's your per square foot. Like Bill said, don't compare to last year. Let them do their own work. They want to. Otherwise, they invariably ask about the increases and ignore the decreases. So. And then we got the...
So, Larry, go back to the report with the asterisks on there and explain what those asterisks mean for the...
Well, these are the more important ones. These are ones we recommend, like invoice you have to print. It's got 2 asterisks, These are this one's sort of optional. It's almost too much detail. You give them every account in GL. It's like, let them ask for this stuff. The more you give them, the more they ask questions for it. So sort of feed it to them.
So the asterisks mean the ones that you will share with tenants if you want to. The ones without asterisks are ones that are generally just shared with management.
Well, no, it's more like important ones, the ones you really need. Then here's the expense cap. They have an expense cap. I recommend giving this because it's always a mystery how they calculate the expense cap. This walks them through the steps. Here was their prior year amount. Here's the increase.
Yep.
Here's a new amount.
Great report.
And here they did help this guy. That expense was $1,257,000. They only paid $1,241,000 based on the cap being here. Here's next year's cap. So it's a nice report. Sort of heads off some of the questions again. And then we got, what else? I think we're almost done here. Charges, okay. So we got charge your tenants. Go back to here. Once you think it's all approved, ready to bill, you go back into AOE. You go back to the current year. And there's summary charges and credits. You give this to your AR department, and you can actually let them input this into your AR system. Here's your final amount due. Here's a new monthly prepayment. If they haven't changed it yet, they can do it now. Here's a retroactive change based on 2 months worth, since we forgot to do it 2 months ago. So anyway, so that's sort of how this works. One more thing, if you're in the under system settings, let me show you the building here. There's a couple things you can change in here. Up in here, so say your GM, you switch, now it's not Bill, somebody else took over, you can change the name here so that it'll be signed by the new person, not Bill. And also this is a contact, it says contact me here, but if I'm gone, you want them to contact me again since I won't be there anymore. So here's a way to change their contact info for that cover letter. That's all right in here. You also change the building square footage. This is your nominal GLA. what we print on the expense reports for management, not what prints on the tenant reports. And the zip code sometimes changes too, so you can change these things in here, besides doing the dates and over here. And then I think we're done. Let's see, I think that's it.
Well, why don't we open it up to Q&A?
Yep.
Can you see if you've gotten any questions?
Let's see, I got nothing, no chat except for Ken saying hello. Hi, Ken. And then we got, I think this is open mic, I believe. Nobody's been blocked. And we have a question and want to go through something one more time, or something you're not sure about, or something we didn't cover? Anybody? Here's a question, I think. Yes, I will be sending this PDF to everybody. In fact, if you signed up for the webinar, you sent me an email back accepting it, I have your email. Otherwise, just send me an email, and I'll reply with this, in an email to you. But we'll put it out there in this downloads and suggestions about right here in our the downloads. It'll be in the help and instructions. It'll be in here. And we'll also put this recorded webinar
the
right here.
Recording of this session.
Here's last calls. Yeah. It's an hour and 4 minutes, but we'll do that out there too. Yeah, it's just a YouTube. It's on YouTube. Bill?
And that's it. Yeah, that's all I've got. And
okay.
If we don't have any questions, we'd like to thank everybody for their business. We are available anytime you want to talk about support issues, or Chicago or Houston sports. And we're here when you need us. We look forward to working with you in 2020, and we wish you happy grow-ups. Take care.
Also, we'll be at the BOMA convention in Philadelphia in end of June.
Yeah.
So if you're there at
we'll
the convention,
have a booth
stop by and see us. We'll have a booth set up, and we'll have some little goodies to give away. So be glad to see you if you're in the neighborhood.
Yeah, we'd love to see you. There is a risk, I have to tell you, that the BOMA session, they haven't weighed in on it yet, but some of the other conferences and trade shows that I go to have already been canceled because of this coronavirus,
well, that's a good point.
COVID-19 thing.
Yeah,
and so, it's impacting airlines and such like that. But as of yet, we don't have any word from BOMA that anything has changed. So we're still planning on being there. And if you're going to be there, we'll see you there.
All right. Thank you, everybody.
Thanks, Larry.
Bye.